We have a special guest with us here in our studios to take us through, really guide us in terms of what the market can do, but more importantly, how to approach things. Vijay Kedia is Managing Director at Kedia Securities. He needs no introduction whatsoever. He's an investor whose every move is tracked very closely. At last count, at least the ones that I counted, he's got investments in at least 15 companies with over 1% holding. Some of his favorite sort of big and most profitable picks have been names like Atul Auto, Serra Sanitary Ware, and we will discuss some of these in greater detail. He's with us here in our studios. Mr. Kedia, great to have you with us here, sir.
Thank you.
Thank you very much. It's always great to see you and a smiling face.
Yeah.
and what what better than having you here with us in person? So
yes,
glad you could make it.
Yeah. We were hoping that we would be speaking to you with the Nifty at all-time highs, but not to be. So maybe another day.
It's okay.
But the mood is still at all-time highs, isn't it?
Exactly. So mood is all-time high. So if not today, it will happen tomorrow.
Whatever, right?
It doesn't matter.
How are you feeling about the market? Are you feeling, at least especially on the mid and small caps, things are getting a little overheated? You were telling me that you have three ways of looking at the market, three phases, right? Three different phases.
Three phases of market life. So sometimes you have to be active, sometimes you have to be selective, and sometimes you have to be inactive.
Right.
And don't forget that inactivity is also an activity.
Right.
So so far I am concerned, I am not buying anything in this market. That does not mean that I am selling also anything. I am 100% invested, and this is what I have been doing for last 30 years. So it's okay. It doesn't matter to me whether market is at all-time high or not all-time high. It is happening today or it is happening after 5 days or happening next month. There are so many mid-caps which have gone up 4 times, 5 times, 10 times in last 2-3 years. So for them, it is all-time high. Already market is all-time high so far mid-caps are concerned. Selective mid-caps. Mid-caps are very large, 5,000 shares. So but selective good mid-caps have really done wonder in this market. Forget about index whether it is all-time high or not. So
you are right now in the inactive active phase. Like you mentioned.
Yeah, I am 24/7 active. But so far, yes. So far buying is concerned, I don't have money also. And I would prefer to whatever seeds you have sown, not necessary every time you have to, sometime it is you have to just watch your plant, watch your plant grow. So I'm in that phase now. I'm invested and still watching what is happening. All-time high just give the momentum in the market. People become, very, you're happy or thing, and then stock price also overshoot or as they say overvalued. So this is what that is happening in this market, but that is part and parcel. That does not mean that you should sell and go.
But it's not some blow off top or anything, right? The fundamentals have been looking good. Earnings pickup has been very good. So in that sense, this is justified, and one can justify it based on fundamentals. What's happening? Whatever
investment I have made, Prashant, I am comfortable in all those stocks. Most of all the stocks, I am comfortable. I don't feel that they have overshot or something, or I should sell or not. As on today, while I am speaking to you, at this moment I am thinking I may change my mind. But I am comfortable in this market. But there may be some euphoria happening in this market. But what we have seen in the past, every time this euphoria happens. So that is a part and parcel of this bull market. So that you have to take in your stride.
You put out a tweet some days back mentioning a company which is tied up with
Tesla.
Yeah. But not Elon Musk.
Just imagine, the stock price went, I think, doubled of 60-70% gone up.
Yeah.
Then I realized, oh my God, what is happening? Then I tweeted, why is it not that Tesla of Elon Musk? So be careful. Yeah. The stock price went down 30-40%.
Correct.
So that people should be, should always be aware and afraid of all this kind of thing. Otherwise they will lose their shirt, and later on they will repent, and then they will say the stock market juwe ka adda hai aur ye ho gaya aur wo mar gaya. There is a code of mine, Prashant. There are 4 caps. There is large cap, mid cap, small caps, and there is another cap which is Bangar cap. And 4,000 shares come into that category, right. Bangar cap category.
Right.
So all these shares will perform, and there is a euphoria, there is a bull market, and there is euphoria in the market, and then they will die down. So one should be careful. So
I don't know, Mr. Kedia, whether you can give us some more color on some of your picks that people always look out for and sort of get. Like, for instance, a stock like Tejas, I don't know if you still own it or not, up 60-70%, and I think there's a precision camshaft. So you're known to pick these stocks and then really back them all the way like you're describing right now. So give us a sense in terms of maybe a theme, though a lot of it is bottom up. But when you look at your portfolio, what part of it are you most optimistic on, despite whatever the market is doing?
No, it is very difficult for me to elaborate that where I'm very more optimistic. It is like your child, you know, your children. You have so many children.
They're all equal.
And I will tell you one thing. I sometimes feel that my love towards all my shares is like maid, not like a mother. Like the maid which comes to our house. So what maid does, वो जिसके लिए घर में जाती है उसके बच्चे को अपना बच्चा समझती है. And the moment she leaves the job, she forgets about the child and she goes to another house and she gives the same love to another child. So for me, it is like a maid and everything is same, you know. So it would be difficult to, maybe today, suppose some stock is doing well, I can say this is my favorite stock. But that would be a lie. I'm liking them, that is why I'm holding. So I usually try to catch or try to enter into a sector where, in a turnaround sector, where the sun has started rising. As you named Tejas, I'm still holding around some 2% or something. I'm holding Tejas. So I bought when I found, I waited and I watched the stock for 3-4 years. And when I found now that it is at an inflection point and the sector is going to turn around, then I entered the stock. So this is what the theme I am applying. It could be any sector. That is no limitation or no restriction that I don't invest in this, I don't invest in that. My job is to just watch what is happening in the economy or in the country.
Let's use Cera Sanitaryware as an example, right? Tell us this. I mean, it's you think you bought it in 2003?
2005-06.
2005-06.
Yeah.
And that has been it's been a what?
Yeah. So
how many X?
How many X? 16,000 times. You know, initially I bought at 60 rupees. Okay, and 2005 and 6, 60 rupees. And in 60 rupees shares, till 2023, till December or say 2023 March, I got some 250 rupees as dividend. Okay, so you have got 4 times as a dividend. Money that your FD ka, everything is covered. And so if I minus the dividend from 60 rupees, so my cost is 0. So if I calculate that even my cost is 1 rupee, now stock price is 8,000 rupees. It is after 1-to-1 bonus. So it is 16,000 rupees. So the stock has given us 16,000 times return in a mere 17-18 years. So this is the magic of compounding and this is the reward of your patience. And don't forget that I've seen a COVID-like situation in March 20. And I've seen Lehman Brothers crisis also. You know, the stock 4,000, and every time whenever this bull market ended, in every bear market, the stock price went down by 50% to 70%. And I held on to that. I saw that kind of, you know, erosion in your wealth or erosion in your portfolio. Even in COVID, June 20, stock price was some 1,900 or 2,000 rupees. And in merely 3 years, it is now back to 8,000 rupees, not back to all-time, lifetime high. 8,000 rupees.
But are you still as convinced about the home building theme? I mean, you still want to hold on to Cera? Or do you think that given the extent of the rally, you perhaps feel that we're somewhere close to sort of, you know?
No, I think theme is intact.
Okay.
So far economy will be rising, keep on rising. So far boom in real estate will be there. So far aspiration of having a home will be there. Whether you own the home or you rent the home, ultimately home has to be there, you know. So as long as population is rising and economy is rising, I think this demand for housing and demand for all these their building material things will keep on continue to rise. But I am selling, I have sold now my last lot, whatever now I am selling, I have sold. After 16,000 times I've written my last lot because I want to keep my mind active so that I can find some another
next
story.
Big multi-bagger.
So the lesson from the Cera story is what? That stay invested.
Stay invested forever. You know, 24 into 7 into 365. If you find a theme, if you like a theme, and if you think that company is doing well as well as the sector is doing well, then don't tinker, then don't play with the stock. You know, think like a farmer. You know, I don't sell my stocks in a bear market. Like a farmer does not sell its land in a drought to buy back in the spring. Okay, so same way I am not selling my shares in a bear market so that I will buy back in a bull market. On the contrary, I don't sell my land in the spring also to buy back in the drought because I am not so smart. I don't know whether I would able to get that kind of quantity which I am holding. That percentage will I be able to, that particular shares will fall or not fall. So I don't want to, you know, become so smart in this market. I want to, you know, remain a fool. That stay invested at any cost.
Let's just talk about another area which you're very bullish on, infrastructure, capex. And in this segment, you have investments in names like Patel Engineering, which you bought recently, but the stock has already done very well after you bought it. Elecon Engineering is another pick of yours. Talk to us about this space. Are we starting a new boom in this space after many years?
I think so. Maybe I am biased, and but I think so that in another sunrise sector, there is a quote of mine that stay in a sunrise sector at any cost, stay out of a sunset industry at any cost. So I think this capex and infrastructure is a sunrise sector currently, for the simple matter that whatever infrastructure spending is happening in the country or happened in the last 5-6 years done by government only. Now private sector investment is also started coming up. So I think the beginning of the bull market for all these companies, all these sectors has begun. And the last boom in infra and capex had come between 2003 and 7. And if you remember, stock price had gone up 10 times, 20 times, 40 times, all those companies. And after that, hundreds of companies have died down because of all this scam or bank scam. And most of the banks NPA happened between 2008 and 20 because of only this infrastructure and steel sector and because of the credit to them. So now I think banks have also become cautious, and now the people have also learned, government has also learned a lesson. And now there are very few companies who can really execute some project worth 3,000 crores, 4,000, 5,000 crores. So whatever companies has been left out in this sector should do well. So, and once this private capex starts happening, so it will directly contribute or directly help companies like Elecon Engineering and all, which are into gear manufacturing. So thinking that all those things in my mind, I bought Elecon Engineering 2 years back, and Patel Engineering I bought just 2 months back, but it's already gone up. It's not at all a recommendation, just a discussion, because people should do their homework.
From an investment standpoint, I wanted to know, how is it that you approach it? Yes, small in size, medium in experience, the SMILE philosophy that you speak about. How important for you is meeting the management of a company that you invest in? How do you do that? How do you go about it? Secondly, how do you screen sectors? Because, sector allocation is majority, or, if not more, at least half of the most important part of investing. So is it top down? Is it bottom up? How do you approach investing like that?
So Mangalam, first let me answer your first question, that meeting management is important or not. If you really ask me, meeting management is not at all important. I remember, I will give you one instance just for an example, just for the viewers. I never met Sera management till the price was 700 rupees. Okay, so one day a friend of mine told me that he knows the CFO and all, or the management, whatever, he knows the management and all, and you should meet him. I said I don't want to meet, because I never bought any shares after meeting the management. Whatever stocks I have bought, always I buy, before, because that is, I don't. So anyway, now coming to my point, at 700 rupees, so there was some conference, that company had organized some conference, in Mumbai, and I went to meet them. And I realized that maybe the stock should not do well, or maybe there would be some problem in the company and all. This is what I could understand from the meeting and all. Eventually, actually, I did not sell any shares, and you see what happened to the price. So I think management himself doesn't know. So far, small cap and mid caps are concerned, I think management himself doesn't know that what is going to happen in the economy and what is happening. Since they don't know anything about the economy, how would they know about what is happening? They may know something like what expansion they have, what are their future plans and all. But the internal factors must be in their control. But external factor, it is not in the control of the management also. So I think it's a futile exercise. You should have, if you are a long-term investor, if your vision is very short, like suppose if you want to buy a share for 1 year or 2 years, then maybe you need to meet the management. So for me, it is not important. And second question was that I always am looking out for the change in the sector, what is happening, as I said earlier described. So that is you can call it a bottom-up approach. But first I should like the sector, then I should find the smallest company in the sector. Like usually all these companies having only 4 or 5 companies in every sector. So I should find the company which is smaller in size, And then if I like the company, if I like the management is the first criteria. If I like the management, then I will buy in a big way. Big way in the sense, whatever money I have at that point of time, I will buy the shares.
All right, that explains the philosophy of entry. Now, the second follow-up is exit. You said that, you're always 100% invested. So, but at the same time, one should also keep booking profits. So, how does Vijay Kedia sell shares? I mean, how does he think of looking at exiting opportunities?
No, when I find that, as I said, though, stay invested in the sunrise industry at any cost and stay out of the sunset industry at any cost. When I see or when I realize that maybe the sun is setting in the sector, that is the time that I would exit the stock. Or if I find some management is doing something fishy or something which they should not do, then also if their focus changes, then also I would sell the shares. Or the shares become so expensive that it is irresistible, then also I could sell. Or I find some another story, that stock has already gone up 10 times, 20 times, or whatever it is. Times are not the criteria. But if I find some better story than the existing stock, then also I may exit.
That's a very, very interesting philosophy, Mr. Kedia, that typically when we think of micro caps, small caps, everybody says bottom up, bottom up. It's a very interesting approach that you first identify the bigger macro theme, the big sector, and then within that you look for the smaller names that you can back on. So to go back to the quote that you've been making, that stay invested in sunrise sectors at any cost. What are the new sunrise sectors you see? There's a lot of chatter on EV. Look at a stock like Electra Green Tech. The moment anybody says renewable EV, stocks start hitting the roof. Do you like that? Do you like anything else? What else is interesting you now?
No, it's a large sector, not only EV in the sense what EV two-wheeler, EV three-wheeler, EV four-wheeler, retrofit, then battery, then BMS, there's whole game of
solar cell,
so many things. So it depends on what you like. So as I have invested in Atul Auto, they are also into electric three-wheeler. Although company is not doing well now, that's because you see the numbers of whatever June, March, May numbers were not good. So that one should remember always that there is always, there are many, as they say, slips between the cups and the lips. So that is there. But I have invested in electric.
So you like electric mobility as a theme?
Yes, electric mobility.
Okay. Anything else? Sunrise themes?
Like aviation, I like.
Okay.
And
Interglobe.
Interglobe, I've invested. People know I've talked about it, that I like Indigo. Again, it's not a recommendation. You should do your homework. But a simple matter, here in Bombay, if you ride a auto rickshaw, it costs you 23 kilometers, 23 rupees per kilometer. If I have to go to Bombay, from Bombay to Delhi, say it's a 2000 kilometer, it will cost me 4,000 rupees if I book my ticket 30 days in advance. That means 2 rupees kilometer. In 14 days, if I have to book within 14 days, then it will cost me 8,000 rupees. Then again, it's 4 rupees kilometer. So this airfare are the cheapest in the world. I do not mean that they should increase the fare and all, and it does not come into any regulation also. Government cannot control. If government would like to control the aviation sector, then we have to go by walking.
But I think the minister recently said that there is no plan, right, to cap
they cannot, but it is not under regulation.
Yeah. Now that you put it that way, now that Mr. Kedia describes it that way, that even at 8,000 rupees, it's 4 rupees a kilometer, and your auto rickshaw charges you 23 rupees a kilometer. That's new perspective. Now I won't feel that bad when I'm booking my next flight, maybe.
Mr. Kedia, you're famous for coming up with very simple sayings in a way which describe your thoughts about the market in a very creative way. You're a very creative person. So I don't know if you want to sing, but I just want to ask you, there was something you said, life is rude.
Yeah.
Right? If you, please, why don't you tell us?
I will read out to you.
Why don't you read it out?
Yeah. Life is rude. When you try to figure out the trend of inflation, recession and crude. Life is cool when you stay invested in this market like a fool. Life is fun when you are invested for the long run. Life is a blessing when you don't compare investing with casinos and racing. Life favors when you don't entirely depend on economists, chartists and neighbors. Life slaps when you can't avoid the temptation of investing in Bhangar cap. Life honors when you invest with the mindset of co-owners. Life is a fight when you want to become a millionaire overnight.